Hello, today is Friday. It is 4:10 in the afternoon on February 3rd, 2023. The weekend report is titled Technicals Remain Strong, Fundamentals Iffy, and this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. A friendly reminder that this post is for informational use only. The views expressed are those of the author, Jonathan M. Gurney, that is me. This material is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, or solicitation to buy or sell any securities or to adapt any investment strategy. In short, we're trying to keep clients aware of what is happening, the moves we make, and give our opinion along the way. Let's hit the charts. Okay, we're actually going to try to stick to the 5-minute timer in the top right. So this week was nuts. We told you in the last weekend review that we are going to keep things light. With things like the Fed meeting, you're going to get 3% swings, and that was what happened on nothing. This week was very odd. You would get headlines such as this. I'll show it to you real quick. This is from Jerome Powell. Inflation well above goal, meaning in reality, the data is showing that inflation is coming down, but he's saying inflation is still high. In normal circumstances, the market would go down 3 to 4% on this. The market faked down and rallied significantly to a crazy number, and I'll show the price action to you. And Powell also said we'll likely need restrictive stance for some time. Also, Apple had one of the worst revenue sales reports on Thursday, and the stock was positive by almost 3% today. So there's some weird things happening, and that's why this is titled as it is. Fundamentals iffy, technicals are strong. What wins in this scenario? Price action. So in that scenario, what is price action doing? Price action is still very strong objectively. I just know in these scenarios that you're going to get a headline and it could make 0 sense, which it did this week as I just showed you, and it still went higher. So it was a good week for the market. We traded one thing for 5 minutes, got a 0.22% gain, and I was out. I just had very little confidence in whether any of this could hold. So again, this is the S&P 500. Here's Wednesday, the meeting, okay? Here's the headline, went down saying inflation is still too high. Boom, reversed. Guys, this is like a 3 to 4% move. The QQQ or NASDAQ reversed about 5% on this move. You cannot catch this. The key level that we were watching, that we told you to watch last week to say above 4080 was the key level. 4080 broke and it just took off. And you have to understand, when I try to place orders in that situation, you don't know where you could get filled. So everybody traded the same thing. You just have to wait for a dip, and of course overnight it consolidated and gapped up. It's like, what do? You have to just be patient. It's frustrating. I was losing my mind as well, but we are consolidating here. You can see this channel here, like this is all very bullish. There's nothing wrong with price action. Price action wins, and the fact that we're rallying on bad news is not a bad thing. It means it could be priced in. Now, are we a bit extended? Yes. So like the S&P 500, you can see when we get this far above the 5-day moving average, the orange line, you got to watch out. And so we're testing this gap here. There is a gap that is from a previous time period at 41.97. We went exactly to 41.95. Not a coincidence. You got to know the levels. Tested that, went down, and we tested the bottom gap. Now we're kind of in no man's land, 41.36. I want to see, as I said above, get above 41.50. That is key. We lost it today and kind of tumbled a little bit. But if we hold 41.21, that's ideal. But I do expect, I would not surprise me to get a test back down into, the 4100 level based on many time frames. This is midterm. And also look at this. This is more like the 40-80 range, would be a test of the 50-day moving average on this time frame. We're getting to better risk reward, but when it's up here, just you got to be careful. And thank goodness I didn't add until at a key level today, when things were a little more realistic and a little more calm. I mean, we still had 2 to 3% swings today, but the reality was I felt more confident with there not being a news event that could completely turn it the other direction and make 0 sense. So this is one negative. The PMO is curling over, but that is short term. Still, everything is very, very strong. IWM is still a leader. Check this out. This, I think, as I've been pointing out, the Russell 2000 is a killer place to be right now. Still above the 5-day moving average, even after a 0.67% decline. Just a complete beast. The QQQ had a heck of a week this week, but it just needs to consolidate. Like when you get a gap out of the cloud, it's called this gray cloud, you're going to get some consolidation. You just can't chase it. So overall breadth is still very strong. I know the timer is out, so I'm trying to respect that. Breadth is still very, very strong. Investment advisors and active investment managers are still very, very highly allocated, which is a positive. Breadth is still strong. Look at the new high still. This does not factor in today. This will be much lower today. But the reality is breadth is still good. We're above a 5-day moving average. Still at this point, it probably tests some of the levels. Again, when you just skyrocket through this, when you get a straight move up like this, like you cannot do anything about that. You either have to be positioned in it, because if you try to place a market order, you're going to get chopped up through all these different trades through here, and you don't know where you're going to get filled. So you're putting yourself at risk for a big decline at some point. Now, it didn't do that until it's consolidating well. So none of this is bearish. None of the fundamentals, truthfully, they may not matter, because a lot of these stocks are still down so much, even after a significant rally in 2023. So again, the rhetoric has changed completely. Everybody is buying the dip at this point. If we break this line, you got to take caution, but it probably will continue to be a bouncing opportunity, because many people have missed this rally. I've missed a decent chunk of this rally. It's been frustrating, but I know not to chase this. I've done that so many times in the past in a big headline week. We probably need to backfill a little bit, but if not, if we get above 4150, right here, it very well could go higher. Across the pond, things are still strong. Things got a little weak in China. Not surprising, because it needed a breather, but overall, fundamentals are good. Technicals are good. Fundamentals are not good. But generally, that's what happens when the market is shifting in front of the economy, meaning the economy is still kind of, truthfully, things in the economy are almost too strong, which is why the Fed is like, we need the market to go down because inflation is actually going down, but we put too much money in the system. So fundamentals are tricky here, because they put so much money in the system. They're saying, hey, we need to keep tightening. We need to keep tightening. The reality is rates are coming down naturally. So right now, as I always say, price wins, and price is definitely doing the right thing. This is trending. We are getting some backfill, and I would love a test back to 4,000 or even 4,100 at least. And that could happen very quickly next week. But right now, we're above the 5-day moving average. There's nothing bearish about this. A nice test day down today. But when you see a headline like, many of these earnings reports from the big boys are really not great, but this stock was down 4% originally, squeezed positive today, right at the open. So you have to start to question, is this more of a squeeze positioning war, or is this, is this true strength? To see bad news get bought like this when you have the worst revenue sales in 7 years, that's hard to fathom. Like, that's usually a 7% decline day, and it's squeezing. So you're seeing the difficulty in what I have to do for a living. You have to be non-biased and say, hey, price action is still good despite the fundamentals, but again, these stocks are still down so much, it might be the reverse. And again, as we have always stated, the market usually bottoms before the economy, and that could be what we're seeing. We'll see next week. So we'll let you go. Have a great weekend. See you guys.